Welcome back to the Capital Mindset Show, everyone. Hope you guys have a great day as always. Today we're going to be talking about FMC Corp, heavily requested stock. Even though it is up 3.71%, the reason why I think it's heavily requested is it's down 58.38%, and it's also been talked about by a couple of value investors here on the platform. Now, when we dive into this, and I'll show you their videos, and I'll show you the title of the video so you can watch it yourself, or you can just trust me as far as a quick summary of their videos. I haven't seen any investors really talk about the main risks, at least the prominent ones, or at the very least, the ones I'm going to show you here. There might be some, but I haven't found them. So with that being said, let's get into it. So FMC Corp, what did they do? On a high level, they produce chemicals that help protect the agricultural industry, aka pesticides. And this is the majority of where their revenues actually come from. And also, this is potentially where we might see some issues, but we'll get to that later in the video. So if you go on YouTube and you look up FMC Corp, or you are a follower of these value investors, you might have stumbled across Sven Carlin's video, he has 230,000 subscribers and has a research platform where he charges you, I don't know how much, hundreds of dollars a year for his research. Now, in this video, he goes over the company, the overview, the opportunity, and the risks. I'll focus in on the risks here because the opportunity also wasn't very, it's cheap. That was pretty much the opportunity. But the risk portion doesn't cover any of the actual risks. Now, I don't know if he does this on his research platform behind a paywall, but it doesn't seem like he kind of got it because it's a very quick, just kind of overview. Then there's some more details as to what the other opportunity might be, which I will go over here in today's video. But I didn't see it here. And it's just that there's a lot of debt. And I don't agree with that. If you actually go to the SEC filing, you see that there's a current portion of about $1 billion and about another 3 some odd billion on the long-term portion. But when you look at the income the company generates from their operation, it doesn't seem like that much of a risk. This doesn't seem like the actual reason why the stock is down so much. And I would say, yeah, it's not the reason why the stock is down so much. We'll get into exactly why it is. So if you kind of, to summarize this video, I think it's very poorly researched and just kind of says the stock is cheap and the debt is the reason why it's down. It seems like the person, Sven, didn't actually go into or look up why it's down, and I feel like you could find it very easily with the Google search. And so I don't feel like this video had provided any value. I hope this video published on YouTube will provide value to the public audience. Now, if you go to this other video by J Money, who's not as large as Sven, but it's another video I saw that recently was published on FMC. You go over this. Again, you can watch it for yourself, but just trust me as far as like the summary goes. He basically says it's cheap and the opportunity and just kind of plugs it into a calculator and spits out value and says you should buy. So my problem with a lot of these, let's call it content creators who are amateur analysts. Let's call them amateur analysts because anyone can really be an analyst. You can call yourself an analyst, amateur analyst, whatever. They actually are, I think, a bit problematic as far as the strategy goes because people have kind of put valuation tools or valuation modeling on like a pedestal. And this is the key. The key is that not everyone's going to create the same level or quality in valuation modeling. And as far as your projections go, that's where the bread and butter has to come from on what will determine the success rate. And so I think these videos offer a lot of confirmation bias, a lot of bulls, and I see them all the time. They're providing actually no additional value, and I feel like I watched this video and I didn't really come out of it with any additional, let's call it, information that would help me as far as making a decision on FMC Corp. All I kind of got is that, you plug in random numbers, you plug in random discounts, you plug in et cetera, et cetera, et cetera. You come up with a random value, and then it's below that value, therefore you should just buy it. And I feel like this is almost equivalent to kind of just throwing stuff at the dartboard and hoping it works, and you're going to get about what you get, which is random performance measures. So you're probably not going to outperform the market over a long period of time following this strategy, but hey, this does well on YouTube. So again, another video, didn't really see any of the risks. Now, what are the risks? Well, let's actually start talking a little bit about the company. Let's go over the presentation and kind of get a feel for this. So if you go over the presentation published last quarter in Q3 2023, this is going to suffice us for, I guess, the premise of the video here today. Now, if we look at the revenue breakdown, we see that the majority of it actually comes from Latin America, or the largest lion's share comes from Latin America, about 466 million. Now, I'll just tell you that is Brazil. So Brazil is a huge market for this company. And then Asia primarily consists of India and of course, China. So now here's some problems. And North America is there too. But here's some problems. So one of the things that you should know that we'll get into. I just went ahead and pulled up the most recent quarter just because we had it up already. So if we look again, the numbers haven't changed. As I was saying, the other one served us just as well to drive the point on exposure or market exposure. But if we take a look at Latin America, lower volumes, drought conditions in Brazil continue to be a pressing issue. So a lot of blaming on, extra, let's call it nature, the acts of God are causing some underperformance. But one thing that I will say is that this doesn't actually paint the full picture. If we actually look at the flagship product, which I believe is called Diamides or something like that, I might be pronouncing it horribly, and I apologize. But if you actually look up the flagship product of this company, they have lost the, let's call it ingredient patents in countries like China and India, and they've lost, I think, the patent also everywhere. And what they've been keeping and what they've said they've kept is the process patents. So process patents is simply how you make the product, the way you produce the product, not the actual ingredients that goes into the product. And so what this has caused is some generics to enter the market. Now, generics entering the market, overall, in any case, even with, like, let's say pharmaceuticals, it's a bad situation. So if we actually look at what the generic products are offering, we see that the prices are often around 80% lower than what they are charging for their product. Now, in Brazil, which is their most important market, what we've been seeing is, of course, the reports that potentially their generic counterparts are entering the market via the black market. And so they've been having a little bit of trouble in the courts trying to prevent that product from taking hold. And in general, we know that it's going to happen. Now, let's put a pin in this. We're going to come back to it, talk a little bit more detail. What are some of the issues that they've highlighted? So we saw, we see adverse weather, etc., but they also talk a lot in the earnings reports about destocking. So now, if you're a legitimate bull, and there are legitimate bulls out there, if you're a legitimate bull, you're looking at this story and you're saying the company is going through a destocking event, and that's the primary driver of the current headwinds. So if that's the case, there's a strong opportunity here, because even if you consider the loss of the patents in the process patents in roughly 2 years, the projections of the company are that in 2026, they will start to experience some revenue decline or revenue headwinds. So, and then they can return to growth at some point in the future with additional new products that they might introduce to the market. But for now, they seem to have, and this is what the bulls will say, a strong stranglehold on their markets, and right now it's just destocking. A lot of demand was pulled forward, and so we're going to have to work through that in 2024, returning to growth in 2025 and 2026. Then we have another issue to worry about there. So that the current price is not reflective of this destocking. This current price is trying to price in the fact that they're losing market share and patents, etc., across the world. So those are the two camps here. Legitimate bullish argument. It's not, there's no risk, I think, of the debt. Now, the debt does become a risk if the second thing is true. And we'll talk about that. So there's another additional point to actually discuss here, and that has something to do with the debt. So if we actually come back here to the financial statement, and you see that in the current liabilities, you see short-term debt, current portion of long-term debt. Well, this seems like a problem in the case that, they have to refinance. What do we know about current refinancing environment? Refinancing environment isn't the best right now because rates are higher. If they were refinancing in 2021, 2022 even, it was a lot better. Now, in today's environment, they're going to have to pay up a little bit more in terms of interest rates. They could use some of that cash that they have, but they don't have enough cash on hand to pay down that debt. What they do have is the trade receivables. Okay, so this is where you start to kind of get a point of why business and analysis is so nuanced. So they do a lot of business in Brazil, and a massive portion of that, and they have this disclosed in their financial statements. You can go look at it yourself, or you just trust me, bro, on this. But a massive portion of their trade receivables, as shown here at $2.5 billion, is in Brazil. Now, there's something you may not know about Brazilian business, right? So it is very normal for trade receivables to take quite some time to pay out in Brazil. We saw this with, which wasn't raising any red flags at the time, with Americanas, a supermarket in Brazil that basically defaulted on all their payables. So they owed a lot of payments to a lot of their suppliers, and they just ended up not paying them at all. And that was a whole scandal. So, but if you actually look at the details of that story and you understood the nuances of the Brazilian economy or the Brazilian business environment, it was fairly normal, at least, to have, payables extended out to about 1 year. Receivables, by contrast, extend out to about 1 year. And so this puts a lot of interesting nuance into the discussion here with FMC Corp. Again, completely lacking in this video and this video, which kind of shows the quality of analysis that sometimes is found on YouTube, unfortunately. But again, this is where I'll take a pause. And if you're liking the analysis so far, if you're liking the explanation so far, I ask you, please feel free to leave a like, comment. That's how you help this channel grow and in the algorithms. And if you love this content that much, you can subscribe, and you can also check out the club if you so wish in the description below. But going back to the content here at hand, if we actually take a look at the trade receivables of 2.5 billion, this is where a whole separate discussion has to be had. If you actually look at their reports, they are selling the trade receivables. And what this does is when a business wants to cash out on their receivables, they will sell it to a financial institution or another, let's call it third party, at some form of discount. And that discount is really dependent on what market we're talking about. In this case, we're talking about the Brazilian market. So when they sell in the receivables in the Brazilian market, the other willing buyer is going to have some sort of comparison to do. And that is typically with the rate of interest in that country. Well, Brazilian rate of interest right now is actually significantly higher than the United States. Now, FMC Corp would want to do this for a couple of reasons. One of the reasons is, okay, I'm willing to take that discount, and a heftier discount at that, because I want to minimize the risk of the currency, the Brazilian real, from depreciating further against the dollar in that 1 year period. That's a risk I have to consider. Of course, I have foreign exchange hedging, etc. But in the case, I would like to have the cash now rather than later. Another thing that they might be thinking about is I need to monetize that receivables in order to make up the difference between what I want to, let's say, refinance on the current portion of long-term debt versus what I want to pay off. And so there's a couple of reasons why that receivables portion is a little bit problematic. It's not the same kind of receivables as that of if you had receivables in the United States or many other countries. So it's a bit nuanced, and that's something that you need to point out as far as some of the risks, right? I think I look at that and I say, okay, well, you have $2.5 billion, and some people say, receivables, that's money that's owed to me. I can, use that. So the current portion's not that big of a problem because I should receive $2.5 billion. And I'm not saying that the Brazilian, let's call it, companies that owe FMC are, bad creditors, bad debtors, and they're not going to pay you. But I am saying that it's something that you have to take into account, at least acknowledge when you're looking at a company like FMC Corp. So again, we come back to that old adage or that old statement that I've said in this channel for quite some time. The business environment that you find yourselves in is very much important to the thesis, whether it's Chinese VIE companies, whether it's FMC, which is an American company that has a large exposure to Latin America, primarily Brazil. So you have to take that into consideration. This is the details that matter when you're doing your analysis and will determine whether or not you, let's call it, accidentally go into a value trap or you make a legitimate investment. Of course, when I've spoken to some of the actual bulls, and I say actual bulls as a sign of respect to them, because they did actually think this well out. They don't see that as too much of a risk, and they don't think that they're getting that much of a discount on the sales of those receivables. But I did want to point out that it may come up to be an issue. So overall, what do you have here? Well, I think that if you are in the camp that the current issue is just destocking, and the patent loss isn't going to be that much of a problem until 2026, so you're basically falling in line with management's projections, then there's a strong opportunity here. And at that point, I would say the current price presents an interesting buying opportunity for a company like FMC Corp. But if you fall in the other camp where you say, well, there's a lot of noise here. There's a lot of noise with the patent losses. And at the end of the day, they're still going to lose, or they're still going to experience, and they are saying this, projected revenue declines or declining growth in 2026 due to those patent losses. I don't want to get involved here. And on top of that, they're dealing in a, let's call it, business environment that I'm not entirely comfortable with. If you're in that camp, then it's at least an avoid, not necessarily a short. But there are legitimate reasons, as I just stated, to be bullish on the company at current prices. There are just risks, and I hopefully have addressed those risks for you. The company, in my opinion, I think it's a little bit of both. I think that there's been some destocking And so that's currently underway, and that will correct itself. But at the same time, I believe that there have been additional pressures that are not ignorable in the Asian markets that might extend faster than what some people might believe into the Brazilian markets, because I generally don't necessarily trust the, let's call it, fairness of the Brazilian economy. And I think that they're currently fighting in the courts. I don't know if it's going to go their way. Now, that's just completely speculation. If I had that information in front of me, I would probably short. But I'm not going to do that because I don't. It's just entirely speculation that I don't think it's going to go their way. So, furthermore, I also feel that a company that's heavily exposed to a foreign economy, in particular Brazil, I personally am not comfortable with that level of involvement. There are certain other businesses that I would turn a blind eye to that completely. It just entirely depends on how you're involved and plugged into the Brazilian economy. Something like this, where you're relying on patents and you're charging a lot higher prices than what other products like generics would be in the current market. There's not really a moat there beyond just like legal. There's a legal moat, which sometimes could be the best kind of moat, but other times I feel like is something that people put their use it too much as a crutch for their analysis or business model. And in this case, I'm not quite there yet. So that being said, I hope that overall the picture has been quite clear as to what the opportunity here is, what the risks are. If you fall in camp number one, as far as the destocking goes, this seems like a very interesting opportunity, and just pay attention to what the projections are out when you're doing your own analysis as to what post 2026 has, and be paying attention to what management says that their plan is going forward for that point. But if you fall into camp number two, I think that there's just better opportunities out there, and that's just my opinion. So with that being said, thank you guys so much for watching. If you enjoyed this video, again, feel free to share this video, like it, subscribe, etc. That's how you help out the channel. I'll see you guys on the next one. Bye.